Things are going well. They've exceeded expectations, and it's still early days, and integrations can be challenging, but we're really pleased with the results thus far. As a matter of fact, LinkedIn, prior to the current quarter, which hasn't been announced yet, but if you go back several quarters now, LinkedIn has shown top-line acceleration, and we've been accelerating our engagement. Engagement is at record levels. Revenue is growing in a way we haven't seen since our IPO, and the big difference, of course, is that we're over 10 times the size that we were at that time. So it's been great to see. LinkedIn continues to operate independently, but we're also able to leverage Microsoft's huge footprint of roughly 1 billion customers on a global basis, their talent, their infrastructure, their advanced technology. So far, so good.
What does LinkedIn's acquisition mean for Microsoft? What are they able to glean from you that they didn't have before?
Well, we've got a platform, and we've got roughly 540 million, north of 540 million members. And as a result of those members, their networks, their professional identity, Microsoft is in a position where it can add even greater value by virtue of integrating some of our products, some of our data into Microsoft's products. So Outlook would be a perfect example where you understand who it is that's sending you an email, you understand who they're connected to, you can get connected to them if you're not already connected, and taking that social fabric and being able to leverage that across not only Outlook but the Office suite is really potentially powerful.
Jeff, you mentioned how much bigger LinkedIn is now than it was at the time of your IPO back 2011. I can remember investors who were skeptical of LinkedIn as a business saying, well, they're really just doing well because of a very loose job market. We still had high unemployment. You had a lot of people in motion. Engagement was being driven by people looking for jobs. Obviously, it wasn't just about that. But now that we have a tighter job market, you talk about the skills gap. Are you seeing different types of engagement by employers? Are they doing anything more? Is it in the way of training or being a little more creative about things and trying to get talent?
Yes to all of the above. At the time, our core recruiting offering was our Recruiter flagship product, which enabled companies and recruiters to do passive candidate recruiting. So if they had a job opening, they could come on LinkedIn and do a search against criteria, and people that weren't necessarily actively looking for work were in our database and could be found that way. And since that time, companies and employers have started to really think about how to build their talent brands, how to leverage our active job-seeking capability where they can target folks who are proactively looking for work. So there's been a real change and evolution. We've seen the utilization of LinkedIn expand beyond knowledge workers and our core professional user base. And in the retail industry, for example, we're starting to see folks pursue middle skill workers. So there's been a lot of new use cases. And then going forward, we're going to be leveraging our talent analytics capability, and we're excited about that to help employers start to think proactively about their workforce strategies. Those skills gaps we were talking about earlier, how they can better train or retrain their current workforces to take advantage of new technologies.
Jeff, real quickly, obviously Facebook and some of the other Silicon Valley companies have faced a lot of pressure because of the information that they collect from their users that they then turn around and sell to advertisers. I realize you're in a slightly different position because these are people who are looking to connect with other businesses and other potential employees. But what have you done or thought or changed about privacy given all the furor that's erupted over the Facebook situation?
Yeah, so for us historically, members first has been our most important value. We have 6 codified values at the company. Members first is by far and away the most important of those. And the whole derivation of members first is with an acknowledgement that the trust of our members makes the entire ecosystem possible. For us, trust is consistency over time. And so with regard to how we leverage data, we've always tried to keep that first and foremost top of mind.
Do you sell it? Do you sell that information, or do advertisers come in on LinkedIn? I'm not clear how that works.
Yeah, we have a marketing solutions business. It actually continues to be our fastest growing business at scale with regard to sponsored content in the feed. We don't sell data specifically in that context, but marketers and advertisers are capable of leveraging data to better target our members and provide them more relevant offerings. But with regard to how data is specifically leveraged, we always try to keep in mind 3 things. First and foremost, we try to be as consistent as possible and try to change those terms of service and those rules as little as we can. When we do make changes, we try to be as clear with our membership as possible in terms of what changes have taken place. And then lastly, if a change does take place, we try to ensure that our members can control how that data is being utilized going forward.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.